Ever wondered who controls the money supply in the US? It's the Federal Reserve. Now, let's dive a little deeper. The Federal Reserve System, often simply called the Fed, is the central bank of the United States. It was established more than a century ago in 1913, with a clear mission to ensure financial stability. Its main goals? Price stability and maximum employment. Now, the Fed isn't a single entity. It's a system made up of 12 regional Federal Reserve banks scattered across the country, and a board of governors that oversees everything. Together, they work to keep our economy balanced and thriving. While the Fed is independent, it doesn't operate in a vacuum. It's subject to congressional oversight, meaning it's accountable to the government and by extension to the people. It's a bit like a tightrope walker, balancing the needs of the economy with the realities of the financial world. So the Federal Reserve is not just a bank, but a system that ensures financial stability in the United States. But what exactly does the Federal Reserve do? Let's dive deeper. As the central bank of the United States, the Federal Reserve plays 5 key roles. First up is setting monetary policy. This involves controlling the money supply, influencing interest rates, and steering the economy towards stability and growth. Next, it monitors financial system risks, keeping an eye on the overall health of the financial sector to prevent crises. Third, it supervises and regulates financial institutions, ensuring they follow the rules and operate in a safe and sound manner. The fourth function revolves around fostering payment and settlement system safety and efficiency. For instance, in 2023, the Fed launched the FedNow payment system, a platform that enables real-time monitoring of payments, enhancing the efficiency of transactions. Last but not least, the Federal Reserve promotes consumer protection and community development, making sure that financial services are accessible and fair for everyone. In essence, the Federal Reserve is the backbone of the U.S. economy and financial system. The Federal Reserve doesn't just sit in the background, it plays a crucial role in our daily lives. It's a major player in the economic field, wielding influence over interest rates, inflation, and economic growth. The Federal Reserve's toolbox is filled with powerful instruments like setting interest rates and conducting open market operations. These tools are not just for show, they are actively used to steer the economic ship of the United States. One of the key committees within the Federal Reserve is the Federal Open Market Committee, which takes the helm in directing U.S. monetary policy. This committee's decisions on interest rates can ripple across the economy, affecting everything from the mortgage rates on your home to the interest on your savings account. The Federal Reserve also has clear targets it aims to hit. One of these is an average inflation rate of 2%, a rate that's deemed just right to keep the economy humming without letting prices skyrocket. Another key aim is maximum employment. The Fed strives for a scenario where everyone who wants to work can find a job. So, the next time you think about the economy, remember the role of the Federal Reserve. It's more important than you might realize.